Hi, I'm Valerie Steffen, part of Bright's training team, and I'd like to welcome you today to our presentation on the Bright MLS T3 Home Demand Index. Today I'll be featuring Jack Miller, the president of T360, our partner in bringing the Home Demand Index. He's going to give us some insight on some of the deep dive questions that we've received. And today, overall, we're going to be talking about accessing the home demand index and the various components of the index itself. Lots of detail about how the index is created, so you'll be able to use it confidently, the various uses you might put it to, and I'm going to interweave answers to the questions that we've been receiving as part of the registration process and coming in through our engagement teams as we go through. So, what is this new feature in a nutshell? Well, in brief, the Bright MLS T3 Home Demand Index, or HDI, tracks the level of interest through pre-purchase activity to measure home buying demand in a specific market. We've broken this data out as MLS markets into kind of the big three: Baltimore, Philly, and DC. And within those, we've broken it down also to a zip code level in those markets and by home type in those big three markets. So let's break down that overall description a little bit more. I want to make sure that everyone understands just what an index is exactly. An index is a method to track the performance of a group of assets in a standardized way. So you've probably heard of broad-based indexes that capture entire markets, like say the Standard & Poor's 500 index or the Dow Jones Industrial Average. Well, ours is a more specialized index, and as I said, it focuses on buyer level demand in specific markets. And the HDI uses factors like agents viewing reports on behalf of buyers, buyer views of listings sent by their agent, showings, and we crunch a whole lot of data to come up with the index. So just for example, in a 1 month alone, over 135,000 plus pieces of showing data were used to determine a score for buyer demand in a single market segment. So we take that score and it's compared against a baseline, and our baseline is the 2019 market. So what would be considered steady or normal is a score of about 100, and scores that fall below would indicate less demand in the market, and scores above 100 indicate more demand. And I want to turn to our expert here, Jack Miller from T360, to answer one of the sort of deeper dive questions we received. And that is, how is 100 the base of the index? Does a score of 100 mean a normal market? And does that correlate with a buyer's market or a seller's market or months of supply of demand?
That's a great question. So the 100 this is what's different about a housing index. Housing indexes in general tend to baseline off of a point in time. They'll pick a point in time and say, we're going to start that point in time as our baseline, and then we're going to measure against that baseline over time. So we baselined on 2019 activity data. So a 100 represents the baseline from the 2019 activity data. It's probably really good we didn't baseline off of 2020 because it was such a wild year, but 2019 was our baseline activity. So we expect, you'll see this in all indexes, is that there's going to be, if there's more and more activity, you'll see some natural drift up. So 100 was what was normal for the market in 2019. But, as communities grow, as there's more housing, as there's more stuff going on, you may see that, 110 might become kind of the norm for the level of shopping activity. So that's how that baseline works. That's why the 100. And again, this is coming from the world of indexes and economics, where they want to pick a point in time and compare everything back to that and say, how are we doing versus that original measurement, so that we have a consistent view of what's going on.
Great. So in terms of what this means to you, whether you're looking to grow your market expertise, share it to demonstrate insight into housing demand, target your prospecting efforts, present sellers with compelling arguments for pricing it right, or guide buyers in the right direction for a sound investment and a solid offering strategy, Bright's Home Demand Index is valuable insight. The question is really, how will you use it to drive your business forward? We're going to dig into where you may use various aspects of the report and suggested use cases as we continue. So enough overview, let's jump into the index itself. The index is housed under the Market menu, under the Market Resources section, Home Demand Index. And I want to pause here just for a second to address a couple of related questions that we're receiving a lot, and that is, how do I learn more and how do I explain this to my clients? Well, you're in the right place to learn more and get the information you need for your narrative or talk track, but we've also provided documentation right within our integrated guide in the menu. So just click on the I for additional information, and there's a video you can watch. If you click Learn More, you'll get to an article and lots of additional valuable information and links, including the ability to download handouts that you may want to utilize. Clicking on the Home Demand Index link, I'm taken to www.homedemandindex.com. And this link can be shared with your clients if you want them to have access to the report itself on their own and all of this information. The site itself additionally has helpful information built into it to assist you with your talk track. Clicking on About will take you to some really helpful background information and give you some context about the report. As an overview, it's giving you what's a great summary to share with a client about what the report is, and that it's, an index or score that incorporates data on pre-sale activities. So the focus is here that it's not calculating based on browsing that we know so many consumers are doing casually on third-party websites, but what a more focused buyer is doing. If you scroll down, you'll learn more about what the differentiators are for this index versus other reports. And this is another place I'm going to pull Jack in to answer a question that has to do with a perceived overlap with our existing reports. So things like, say, smart charts. Is there an overlap there?
We have had some vendors say to us, like, hey, are you guys building a replacement for some reporting tool that is out in the industry? And I think the biggest difference with the Home Demand Index is that we're really comparing it to national housing indexes. We have an economist that's looking at this data with us. So it's more of an evaluative, analytical type of tool as opposed to a reporting tool. So, and I think most of us are used to using reporting tools. We're used to pulling our favorite reports from whatever tool we use, whether it's Smart Chart or an MLS report or things like that. And those are great, and keep using those. If they provide you value, that's amazing. What this is for getting a perspective on what's happening in the market, what the activity and demand level is, and having, again, that expert economics copy that we have written every month about these different parts of the market and what's going on with those parts of the market. So that's really, for me, the key differentiator. And we see this as not a reporting product, but as it's an index, and with economics thinking and analysis.
Great clarification. So this graph really gives a clear illustration of the differentiations, traditional reports that you might come across have a focus on a backward view. They're focused on what has already happened in the market, and that's generally months and sometimes even a quarter in the past. And because they're using pended and sold information as their focus. And the difference is the Bright MLS T3 Home Demand Index has that past data, but the focus is on the pre-purchase data, the activities that are leading to sales. And that allows real estate professionals and their clients to sort of put their ear to the ground of the housing market in an entirely new way. And in looking at that demand, we're able to determine what's happening in near real time and potentially what it's likely to be happening in the near future. I heard a great analogy from Jack Miller, and he explained this as sort of, if you're thinking about sort of these past reports and maybe past indexes, you could equate them to, if you're in a retail situation, say at a mall, they would be like pulling, receipts or reporting information for the past month or the past quarter. Those are certainly valuable. They let you know what the sales were. And again, that's what a typical index or stats report focuses on. But if you're interested in things like, how many buyers are coming to the mall and who's shopping and what stores they're visiting, or, if it's clothes, what clothes are they trying on? Or if it was, a car dealership, what cars are they taking for a test drive? You would look at the home demand index. So let's scroll down further and take a look at the markets covered. And this is an area, again, where we had a lot of questions about how did we determine what areas were encompassed? Who made this determination? And these primary markets were determined in combination with subscriber focus groups and were supported by the data used. So they're not necessarily the groups that, say, the US Census uses, but instead they're the natural market areas at the MLS market level. Finally, at the bottom of this page, you have a little overview of Bright and T360 as organizations. And again, they're useful again to give a little bit of background to a consumer that you might be sharing this with. I want to point out the frequently asked questions section. We have a lot of details here for you and what you might get if you have a response from a client that you choose to share this information with. If they have questions, this again can give you a little more background info. So we can look at the specific counties and cities that were the markets covered. And again, right now the initial markets are Baltimore, Philadelphia, and Washington, D.C. Though we're going to expand coverage later on this year. We're anticipating doing that right about the third quarter of this year. And then we have what are market activity ratings. So we talked about the index being, essentially a score, and where that score falls indicates either a higher level of housing demand or a lower level of housing demand, with 100 being sort of a normalized market. So we created these market activity ratings, and there's 5 of them, to help make it clear what's happening with buyer demand for housing. So at the very top, we have high, so lots of high demand for, showings, lots of pre-sale activity occurring. Moderate would be the next level down, and that's activity showing consistently strong buyer interest. Again, steady right around 100. That would be normal or average. Below that would be slow with relatively low demand, and limited being very little demand and weak buyer interest. In terms of context, pointing out the navigation in the top right section of the screen, we have the 3 markets represented. And if you click on any of these, you'll see at the top the most current month. And we're looking at the April report, which encompasses March's data. A new report is added round about the 15th of each month. And if you scroll down, you can access overview reports back to October of 2020. And you can see the home demand index for each month. So the first thing to take in is where the home demand index is and where that falls in the market activity rating. And we see that the home demand index is high for Philadelphia overall. And just to pause here for a second because of feedback that we're receiving, sometimes the overall home demand index may not feel like an exact match for your experience in your portion of the market with buyers and sellers. So just remember, this is covering the broad geography of that whole market with all home types. So in many cases, drilling down at the zip code level or the home type level may be a better match, depending on your narrative or positioning with the client that you're working with. So back to this example, the HDI is 130, putting it at the highest level. We can see right beside it that the demand has risen from the previous month's 100, a rise of 30%, and it's considerably higher than where we'd seasonally expect based around last year's index of 98. That's up 32.7%. So it would be safe to say, if you're working with a seller, that it's a market in their favor. Demand is there, and here are the stats to back it up. Similarly, if you're representing a buyer in this market, you'd want to make sure that they're armed with this information as they work on offers. A great way to digest this information and put a little context around it is to use the summary that's provided in the overview. This interpretation of market conditions is provided by Dr. Paul Bishop, an economist who formerly worked with the National Association of Realtors. So this area is the initial taste for the information. We'll want to dig deeper, and we can do that by clicking View Details in the top right-hand corner. From here, we can use the individual links to jump to specific sections of the report. Or we can scroll through, which is what I'm going to do. So the overall report is at the top of the page, and as we've talked about it, I'm going to scroll down to the historical year-over-year comparison. Now this is where we get a chance to see a fuller scope of seasonality and a deeper view of past behavior. This will display a rolling 12 months. Our orange line is showing the most recent 12, and the blue line is a year previous. In looking at this, your eye probably shoots immediately to the April dip, where COVID threw the market for a loop. In May, we see pent-up demand pitching the line back up. In October through December, we see a drop-off, as we'd expect, where things slow down through the colder months and holidays. And in January to February, we're a little lower than we were in the previous year and, where we'd anticipate the market being. But we're starting to pick up for spring. You can hover on any of the points to see specifics. And again, we have a nice summation of conditions provided. So it says here, recovery from the depths of the pandemic-induced recession and an improving employment situation has contributed to the rising level of buyer interest. It makes it very digestible. Drilling down still further, we can scroll down to the Home Demand Index map. The Home Demand Indexes are color-coded here at the zip code level. Note the legend at the bottom, and that in hovering, you can get more detailed explanations. This map is really such a clear illustration of how localized real estate can be. In, say, a city, it may be a block-to-block difference in terms of demand. And here we're seeing that at the zip code level, you can have, sort of the highest, which is the dark orange, next to, limited in dark blue. The table beside the map is sorted highest to limited in terms of market activity ratings. So my mind immediately went to using that information in your prospecting efforts. If you're wanting to reach out to prospect to potential sellers, to create inventory, and to share this vital information for demand, you could, do a screen grab, or pop those zip codes or their corresponding cities into Remine or Bright's public records to create labels. You can share the map as part of your talking points. Of course, you'll want to give proper attribution. This information is really going to help you better understand your market. And again, you can share it on your social media, your blog, etc., to help your followers or prospective clients know the marketplace. If I was coming into a high index area as a buyer, I would need to have the expectation that I'll likely be in a multi-offer situation, and that should, inform my offers. And as a seller, I need to prepare myself for potentially an onslaught of showings and a lot of interest if I'm positioned correctly. This is a great illustration if you're working with a seller who also plans on buying. So in terms of strategy, where does their current home fall versus, an area that they'd like to move into if they're changing geographies? If they're maybe in a slow or limited zip code where they're selling and planning to move to a higher demand area where they may have a tougher time getting an offer in, potentially they may want to secure the new property first. Note that in areas where the zip codes are a little smaller, it may be a little harder to see. You can use the search zip code box at the bottom to narrow down to view just a particular zip code. And here I'd like to pause and throw another question over here to Jack. A question that we've received quite a few times is if the 6 home type categories are going to be given index values available at the zip code level.
Part of what now that we've got the zip code map, which was a big push to get through to the zip code level, our team working with Bright MLS is looking at the data at the zip code level to see what level of indexing we can do on top of that. Because keep in mind, every time we do this, we take all the market activity, all the views, all the showings, everything going up. And so the first thing we're doing is we're slicing it all into zip codes. We're taking this big amount of information, we're slicing it into zip codes. And every time you slice up the data, there's a little less data to work with. And so we're now looking at probably the most popular zip codes, the ones that have a lot of listings, a lot of inventory, a lot of showings, a lot of activity, and saying, can we slice those further and dive into a zip code and say, within this zip code, can we reliably produce an index for, a single family home at a certain price point? And we haven't made that determination yet, and that's probably going to be at a zip code by zip code basis.
Okay, so moving on, note that you drill down even further to demand and inventory by home type when you come down the page. Again, we have an Economist overview letting us know all home types had a rise in interest in March. The smallest gain was in the lower price single family segment, which has recorded weak demand for several months. Demand rose by 1/3 in the 2 largest segments, higher price single family homes and townhouses. Except for the aforementioned lower price single family homes, all segments recorded an index significantly higher than 1 year earlier, even though low inventory remained a hurdle for most buyers when searching for a home. You can scroll through all of the home types or zip to a specific option that you're interested in. I want to note that if you look between the MLS markets, Baltimore, Philadelphia, DC, you will note that the price segmentation is different for each. We do maintain 6 separate market segments for each, though. So let's scroll through, and with our first home type, you may see information that can be a little unexpected to you. And this is where I'll ask Jack again for his insight. As we repeatedly received the question, can you clarify the relationship between the home demand index and months of supply and inventory? As again, they're not always what is expected. Often what's expected is a seller's market would show a high demand and, vice versa for a buyer's market.
Is if you have limited inventory, then that can depress the amount of shopping that's going on, the amount of people that are actually out there looking at homes or doing showings. It doesn't mean that you're not in a seller's market, right? Because if there's limited inventory and there's more buyers than there are sellers, then you are in a seller's market and you should advise your clients. But it's a different situation than if you have limited inventory and a ton of demand where there's a lot of people looking and showing. That's where you're going to get in those multiple offer situations consistently. That's where you're going to be like, it's going to be a real pandemonium, right? So that's the difference, because there's just, in some markets, there's just less inventory for people to look at. So there's not as many showings happening. There's not as many views happening. But even in that situation, if you were consulting with the seller, you say, look, we're still in a seller's market. There's still people shopping and buying. You can look at the inventory numbers and say, here's what's selling every month. I still think we can price aggressively, but that's different than limited inventory and a lot of people shopping. Limited inventory and a lot of people shopping, that's just different. So that's why it's not that, and it doesn't correlate. I think this is probably the biggest thing we have to teach, is that it doesn't correlate directly with the buyer's market, seller's market. It's a whole other view into what's going on in the marketplace.
Thanks. So let's keep moving. And just at a glance, you can see the confirmation of the Economist overview. As the higher our price goes, the higher demand increases. So for instance, in single family homes above 485,000, our market activity rating was high at 197, up from 135 the previous month and 111 the prior year. Our months of inventory is 2.2. Average daily inventory last month was $15.95, and inventory sold last month was $7.17. So inventory levels relative to some of the other segments, not terrible. Lots of showings and views, lots of demand, but a decent amount of inventory. So if I was explaining this as part of, say, a listing presentation or including it in a CMA, I'd point out the index growth or shopping demand from last month to this month. And I'd point out the significant increase and certainly comment on the seasonality. We're higher than we typically be, as shown by the number from the prior year. And I'd let my prospective sellers know where they are in terms of competition in their market segment, which is what we see by average daily inventory, months of inventory, and solds for last month. I really think it's so crucial in establishing credibility to show the numbers. You're able to show numbers here that they can't get elsewhere, and it really lets the market speak to their strategy. It's not just you saying it, it's the numbers and the market itself. Making this part of something you share regularly makes the argument, should, circumstances arise where you need to consider something like a price change, again, the market is showing it. Or if, you're on the flip side, if you're working with a buyer, if you need to make an argument for a strong buyer offer, that can certainly help with this as well. If we scroll up to single families between 195,000 and 485,000, we've got a report demonstrating a market where shopping activity is also high, but we've got a different situation in terms of daily inventory and inventory sold last month. And we can think about what we potentially can anticipate if we are working with a buyer who needs to buy in that price range. How can we use the information that's presented here to help inform that buyer's offer, the speed at which they're making a decision, etc. So this is really all about better intelligence through this window into shopping experiences. These reports are so great for helping us set expectations for the current situation and to some degree helping to get a feel for what likely may be developing. Now, I will also make a pitch for using the market performance reports for drilling down even further, say to a specific radius within a market, an area around a particular property, using factors like, beds, baths, greater sort of home type, ownership, all sorts of things. I won't get too deep in there because that's really a whole other webinar, but we do have documentation at support.brightmls.com and videos on youtube.com/brightmls that talk about using the market performance report to that end. Those are also using this pre-purchase behavior and activity. So really good stuff. And these market performance reports are available for the entire Bright footprint. So for those of you who are in one of the markets that are not encompassed in sort of the big three that we have available right now, or, even if you are in one of the big three markets, but want an even more segmented or drilled down view, these are really great. So check them out. So we're about at the end of our time here together, and I know this has been a lot of numbers and a lot of information. So I just want to reiterate that if you'd care to review this presentation later or share it further, you'll find a recording of this presentation at youtube.com/brightmls later today. And again, there's support and articles, videos, handouts, all available at brightmls.com/home demand index. Our customer success coaches are also very happy to bring a more localized view of this to your offices. Just reach out to your local representative. I will thank you again so much for your time today and your attention, and wish you a bright day.